I want to tell you something that took me 40 years, four fortunes, and everything I ever loved to learn. I made $100 million in a single year, $100 million, and I gave it all back. Not because the market was unfair, not because I was unlucky, not because some banker cheated me. I gave it back because I broke one rule, one single rule. And that rule, the rule I am about to teach you today, is the difference between a man who builds wealth and a man who simply borrows it from the market for a little while. My name is Jesse Livermore. They called me the Boy Plunder, the Great Bear of Wall Street, the man who broke the market in 1929. I made four great fortunes in my lifetime, each one worth tens of millions of dollars, and I lost all four of them. Every single time, not because I didn't know how to make money. I knew how to make money better than almost any man alive. I lost them because I didn't know how to keep it. So today, I am going to give you the one lesson I wish someone had locked me in a room and forced me to learn when I was 19 years old. The golden rule of speculation. Never give back your profits. Stay with me. Because by the time I am done, you will understand not just what this rule means, but why the market every single day is trying to steal your money back, and how to make sure it never does. Let me tell you where I came from. Because this rule didn't come from a book. It came from blood, from failure, from sitting alone in a boarding house at 30 years old with nothing left but a notebook full of observations and a few borrowed dollars. I was born in 1877 in Shrewsbury, Massachusetts. My father was a farmer. He wanted me to be a farmer too. I ran away at 14. I got a job at a brokerage firm in Boston, Paine-Webber. My job was simple. I stood at a chalkboard and posted stock price numbers all day long. That was it. Post the numbers. Go home. But while every other boy just wrote the numbers and forgot them, I memorized them. I studied them. I kept a private notebook where I recorded every price movement I noticed, every hesitation, every sudden jump, every pattern in the way certain stocks behaved before big moves. I was obsessed. At 15 years old, I made my first trade. I had saved $5. I made $3.12 in one day. I was trembling, not from excitement, from recognition. I had found the thing I was born to do. By the time I was 20, every bucket shop in Boston had banned me. I was making too much money. The houses refused to take my bets. I moved to New York. I entered the real stock market, and the real stock market humbled me completely. I lost everything twice because the real market moved differently than the bucket shops I had trained in. But I did not quit. I studied my losses the same way I had studied price charts. As a boy, I wrote down every mistake, every emotion that had led me to make a bad decision, every moment where I had ignored what the tape was telling me and listened instead to my own hope. And slowly I began to learn the real rules of this game, the first and most important of which is the one we are here to talk about today. Let me explain this rule in the simplest possible language, because most traders here never give back your profits. They nod, they say yes, obviously, and then they violate it completely within the next 2 weeks. The rule has three parts, and all three parts matter. When a trade goes significantly in your favor, you protect that profit before greed enters the room. Not when you feel like it. Not when you think just a little more. Not when the stock looks like it could go even higher. The moment the profit is meaningful, you take action to protect it. You put a stop behind it. You take some off the table. You make it impossible for the market to take the whole thing back. You never, under any circumstances, allow a winning trade to become a losing trade. This was my most specific rule, and the one I violated the most. If a stock moves in your direction, gives you 15, 20, 30%, and then starts reversing, you sell. You do not hold and hope. You do not tell yourself it will come back. You do not average down into a losing position. You sell. Because a profit that turns into a loss is not just a financial wound. It is a psychological catastrophe. It destroys your confidence. It makes you doubt your own judgment. It makes your next trade emotional rather than rational. And emotional trading is the fastest way to ruin in this business. You decide your exit before you enter. Before you buy a single share, you know exactly at what price you will sell for a profit, and exactly at what price you will sell for a loss. Both numbers written down. committed to. You cannot make rational decisions when you are inside a trade